Investors and traders, welcome to the channel Market Chart Pattern. Today is 16th of June 2024. I hope everyone is having a great weekend. We will be taking a look at the key US markets in this video segment. As always, this video is for educational purposes only and is not a financial advice. So we'll be covering dollar index. We'll take a look at the yields through the eyes of the US Treasury notes and bonds, so mainly the future markets. Brief look at the gold market. And then also foreign markets such as FTSE and DAX. Briefly, we'll cover some of the sectors such as the stocks, the semiconductors, maybe consumer discretionary, utilities, perhaps transporters, and then we'll take a deep dive into the US stock indices and futures and cover the S&P 500, NASDAQ, Dow Jones, and Russell 2000. What you see here, these are the weekly ranges. Let me move this one away. These are the weekly and daily ranges to be expected for the week of 17th of June. The upper portion is the weekly ranges, and on the bottom half you see the daily range to be expected for tomorrow, that is 17th of June 2024. Shorter term traders who are watching the market for intraday moves or even swing trades to be completed within the week, they can actually have a look at the weekly +1, +2 standard deviation and -1, -2 standard deviations. These are really important levels, and I don't remember if I did one for the week ending for the 31st of May, but the NASDAQ actually reached a level which was the -2 standard deviation, and we have seen the market turn and rally from there. So there is really key and good information available, especially for these weekly ranges. So do keep an eye on these, and I will also post them in the description. So just keep in mind this one, right? Okay, so what we are looking at now is the daily chart for the Dow Jones Industrial Average. This is the timing model that we have been using, and it has been pretty spot on for a number of dates. It has called, for example, the high which came in around the 1st of April, and there were minor dates before that as well, and then this really important one, this range between the 24th of May and 29th of May, and what we have seen is around 30th of May in Dow Jones and 31st of May in NASDAQ, for example. A important low come in those markets, and the NASDAQ, for example, has moved much higher, taking out the previous highs. So here we have another key date coming in. We have a minor date coming in around the 21st of June 2024, and then the bigger one that we have been watching for quite some time is the 1st of July 2024. So I am actually going to change this and just make it 1st of July as the major date, and with the timing is we have to give it 2 to 3 trading days on either side. So this is a date we'll just keep in mind, and we'll see what happens, what sort of price action we get. Now the important thing about here is that you can still see this trend line is in place. The 30th of May low is still in place, because that's also the 78.6% retracement. So the market is in a range bound on a very nice looking price action, and this market is really bifurcated because different indices are doing different things, and we'll take a deeper look at those later on. Okay, now we'll start with a dollar index, and I'm going to move to the weekly chart for this. So the last week we were discussing that the dollar index is actually doing a really interesting thing, because this week, which ended for the week of 3rd of June, this was really an inflection point that has come in. And the reason is that we have actually been working with an assumption that this 107.11 is a pretty important high, and with a view that dollar index might be actually weakening. And we have seen this happen. However, this 3rd of June bottom that came in, and the week closed really positive. This could in fact be a point B for this red ABCD pattern, which indicates higher prices. And if we just look at it from the 26th of December, so we're just going back half the year, we see a bottom come in and we see a high come in, and then what we have seen is a higher low and then a higher high come in, and now we have another higher low. So we can actually draw a trend line. It's not going to be a perfect looking trend line, but we can see this higher highs and higher lows pattern there. And because of that, the 3rd of June low might be A, B, and point C, which could in fact see 107 being taken out. And then upside targets could be 108.65, which is the 1.272 expansion of this range high to this range low, and also the 61.8% Fibonacci retracement. So 108.65, a target and a possible strong resistance, but the ABCD is pointing a little bit higher. So, you know, anywhere in this zone, 108.65 to 110 is the kind of a region where we could see the market move into, but of course it has to move above 107, which could be a pretty strong resistance as well. And right close to 108.65, we have this purple ABCD completing here as well, 108.35. So 108.35 to 108.65, in my opinion, is pretty strong resistance, just because the market has been coming lower, but these could also be thought of as targets as well, as long as this point of low of 3rd of June is held, which is the point C. I've not labeled this, but this is A, B, C, D. So really interesting week, because the dollar has been relatively strong the past week, and before that as well, when we have that key economic data come out. So really interesting times. It's just really challenging our narratives as well with regards to the dollar. Now really interesting things happening in the yields. So we'll go and have a look at the shorter term, a 2-year treasury note, and we'll just move down to the daily, because this is where we have been tracking this one. Here we go. And what do we see here? Here we go. So really interesting development. We think that we have this head and shoulder pattern, left shoulder head and right shoulder here, and we are actually in this big ABCD pattern, which could in fact take the yields as low as 3.9%. But along the way, we have seen a market which went into a trading range. In fact, this retracement of these lows right to the 78.6% was pretty sharp if you look at it. And now the really key thing is that it needs to break below this 4.7% yield level, because this is 38.2% retracement of these, you can think of this blue ABCD here, of that, and also the structural support which exists around here, from here, and even here. So this had been a resistance previously, so the previous resistance could actually turn into support. So this is the region where the market is actually trading around and is finding a little bit of support. Once we are able to make a clear breakout of it, then I think we'll get our clear answer that we'll start a quicker move where yields in the 2-year treasury note begin to move lower, and they could actually go as low as 3.9%, where we have this 78.6% retracement coming in. We have the 1.272 expansion of this BC swing of this bigger ABCD cycle. And then of course we have the 1-to-1 price projection ABCD in this black completing around here as well. So that is likely to be a pretty strong support level, and it's also our target once we have a confirmation, which I do believe that we have already started a move in the CD leg, because this is something interesting happening over the course of last week in the US Treasury market. So let's actually take a quick look at the 10-year Treasury note futures. This is the daily chart. We had drawn this really nice looking trend line here, which had been capping these rallies, and these are also these ABCDs Now the interesting thing about this one is that, this is the bearish market symmetry concept, but it also played out pretty much like an ABCD. I can actually draw this one a little bit higher, and you can see it was a perfect ABCD coming right at the this resistance line, and we saw the market move lower sharply. And now over the course of last few trading days, past week, the market has actually reclaimed these highs and in fact closed above this trend line as well, right to the 61.8% retracement. Now what we have going on here is, of course, we have this 61.8% retracement, which is coming from these highs. Let me draw it like this, and it could cause some sort of a pullback that can happen, but in my opinion, I think we have actually started to move in a bigger ABCD higher, and that is going to be something like this. Here we go. And this is something that we have been observing, or we have been following the 30-year node more closely. So I'll just move to that one. So there we go. This is the daily chart of the long bond futures, 30-year duration. That's why they're called the long bond futures. And here, when this move happened here, I believe I'd done a video about this one, and we were discussing while the market was around here, right at the ABCD of this purple one, that if there's a possibility market could actually retrace a little bit lower, challenge these highs, the coming from this channel high. And this is what happened, but in fact it went a little bit higher. But to be able, for the market to be able to do that much, move 2 points lower in one day, that was something pretty remarkable to see in a market as big as this one. And the good thing is it just lasted 2 days and market just recovered. This shows us that there are buyers who actually are buying this market. So because of that, and also because it closed above for 3 consecutive days above this channel line, also above 118.22, we believe that we are in the CD like higher, which could see the market move as high as around 131, maybe a little bit higher, and it will still be a bear market, but the course of least resistance seems to be higher in this CD leg. Now, just like what we observed in the 10-year treasury note, this market is very close to around 121, the 61.8% retracement, and it's just been going up for 1, 2, 3, 4 trading days. So maybe we can see some sideways doji price action to maybe a pullback lower. That possibility still exists, but I believe any weakness that will come in this market is likely to be bought as we begin to further accelerate in this CD leg higher. Then let's also take a look at the TLT. That's the iShares 20+ year treasury bond ETF. So it consists of bonds which are of longer duration, 20 years duration plus in terms of the number of years. 90 to 40 is something that we were looking for, and the market has clearly broken above that on 2 consecutive bases. So again, this market is moving higher in this ABCD. And now let me actually draw that. Let me actually make this a little bit bigger as well, so maybe 3 points, and then we just copy it, move it right here. And let me actually also draw the CD leg like this. Let's also take a look at what the expansion for this CD leg looks like. Let me actually also label it. I haven't labeled it yet. Here we go. And 1.618, 1.272. Let's remove this. Okay. And the interesting thing is, we have the 1.272 and ABCD come pretty close in about 1 point difference. I've not drawn the retracement, just watching this one. Let me actually also label it while we are here. So this is gonna be A. Let's move it here, and then we're gonna have in the brown cycle B. And then we have C, and then we'll have USD. So very similar to the 30-year bond future. So really interesting development, that the yields are moving lower, but the dollar was still pretty strong. It was stable. Okay, so that's interesting developments happening in the um, bond market and the dollar index. Now we'll just quickly take a look at the gold market. So this is the daily chart for COMEX gold. This is futures. This is not the spot gold. So if you are looking at the prices for spot gold, your prices will be different, right? And now, because this is a continuous futures chart, but the most active futures chart has been rolled over to the month of August, and we had some timing come in last Friday. That's the 2.618 internal extension. Initially, we were watching for a time frame of 24th of May to 30th of May for a potential bottom. That did not take place. Eventually, the market went below the 78.6% retracement when we had this 7th of June Friday low come in, which actually moved below that, so it closed lower. So that pattern actually failed, unfortunately. Now, there's a good chance that last Friday might actually be a bottom. The only caveat is that we have this ABCD one-to-one price projection, which actually points a little bit lower to around 2281, which would have been a challenge of these lows coming in on 1st of May. So the chances or the odds are that we are going to be a little bit further in a consolidation mode, more like trading range, and then eventually we begin to resume the uptrend, possibly to 2500 and ultimate target, well, not the ultimate, but on the monthly chart we also have the target of 2700 in gold. So what we can actually do is we can have a look and look at this range. So the gold actually from December 2023 went into a fairly long trading range, and during this period it will be interesting to see what the dollar was doing, because the dollar has been pretty strong, but the gold is also holding really well, especially last Friday when the dollar was resilient. I think the better word to use is resilient. The gold actually rallied. So that's a really interesting development, that on the face of a pretty stronger dollar, the gold is actually holding pretty well in my opinion. And here it went into a trading range, which eventually began to move higher on the 14th of February. So you can see for about 8 weeks it was just in this trading range. And if we just look at this entire move from the 12th of April to where we are now, that is about 8 weeks as well. So maybe this kind of trading range, we might begin to get into really narrow trading ranges, and then you begin to move higher. Now what we can do is, because there's a possibility last Friday was perhaps a low in this market, we can go back to, let's say, a 30-minute chart, and we can see that here we have this ABCD, which is drawn in this brown line, coming around 2365, and just above that 2367 is a 61.8% retracement. So there is a fair amount of resistance right here. So there's a possibility the market actually finds resistance from here, move back and test the bottom of this range, and we just have like a range bound market for some time, and eventually we'll just keep on watching the 61.8% retracement. Once the market begins to close above this, and I mean daily closing basis, then in my opinion would be a good indication that we might have actually seen an important low coming on the 14th of June. That was last Friday in the gold market. So really interesting stuff happening. Gold last Friday moving higher, closed higher in the face of a pretty resilient dollar. So interesting. Okay, now we'll just have a quick look at some of the sectors. So let's take a look at XLF. Normally I do a video about this one, but this week I've not done one, so it is due. So on the daily chart, what we can see is that the XLF has actually closed a little bit lower than this point C. So we were really looking for the market to go and complete this blue pattern, but that scenario might not take place because of this point, the market actually closing, not really closing below this, but actually closing right at it, because normally I'd like to see two closes, proper closes below this level, which in my opinion hasn't happened. It did go below that, just the way it closed. It did go below this level on 13th of June, but closed higher. So interesting development. And just taking a look at it on the weekly chart, what do we see here is the market is just tagging the 20-week moving average, and some of these stocks have the XLF has stocks like JP Morgan, and I've already given my view about JP Morgan, that what I believe this stock is going to be range bound, and the range could be pretty like a 20-point range, from 200 to 223, 225, 20-25 point range. And we have seen the weakness come in this one, just taking the 20 period moving average as well. Let's take a look at the Goldman Sachs. Goldman Sachs actually, it actually got to that point where we had a previous correction. So if the market begins to move lower than this one, then it indicates that we are in a cycle where the correction is likely to be longer than this one. And also in terms of the time, it was around 1 to 3 weeks. It has already been 1, 2, 3, and the fourth week, so a little bit longer in terms of time as well. Okay, so with that, let's take a look at the HGX, which is the housing Philadelphia Housing Index. This on the weekly chart looks a little bit stable, and on the daily chart, let's take a look. What can we see on the daily chart? Yeah, it's just a sideways market, but we can see that it's in bit of a it's forming this kind of a pattern here. It was just more like a triangle, a pennant wedge kind of a pattern. But if the yields begin to move lower, I think it should get supported. But look, it's done pretty well from 23rd of October last year. It's done quite okay. Now, if we take a look at the consumer discretionaries, here we go. As mentioned before, this one is just stuck in a range like this, just a range bound market. If the rates begin to move lower, the yields move lower, this should help this index, because with the expectations of rates moving lower, that should help alleviate some of the pressure on the consumers, who are really careful in buying what they are buying, and might just also help with regards to the credit card rates, for example. So I'm not going to get into the details of that in this video, but again, just sideways price action. Transporters, so let's take a look at here the transporters. They came and here we go, tested this trend line. Here we go. So interesting development on the so I think at one point we had also discussed this inverse head and shoulder pattern. And on the weekly chart, what do we see? We just see a market which is just a really range bound market here. And then let's take a look at the SMHs, which is the VanEck semiconductor, and look what this one is doing. So if you look at some of these sectors, such as consumer discretionary and even financials, look where the money is going. It's just going into the semiconductors, and that's why we see some of these stocks like Nvidia just going through the roof. It's just met this target of 1.618 expansion. It might just go sideways right here. If it just blasts through it to the upside, then we have this potential bigger ABCD, which could see some of those stocks move even higher. So really interesting. we should see something similar happening in the Philadelphia Semiconductor Index stocks as well. Yeah, so this one could also potentially reach the 1.618 expansion on both these ETFs with this index and that ETF SMH come in line. Now, finally moving into the stock indices. So let's start with the S&P 500 cash. So this one on the daily is just really tagging into this 5460 level that we had discussed. It's just gone into a trading range. It's more easily seen on the E-mini futures. This is S&P 500 E-mini futures. You can see the volume. It's just, I don't know what the average volume is around here because I've not drawn the average line here. But on the 13th of June, it was pretty low. Looks like it wants to tag 5570, where we also have this ABCD. So this is what we are looking on the daily chart. Moving on to the weekly, we have pretty strong resistance coming in from 55, 5560, 5570, because we have the 1.618 expansion of this entire 2022 bear market approaching as well. So really interesting levels as we reach the market is reaching, and we have some timing coming in around the 1st of July. Now there is a talk about the advanced decline lines. So I have this New York Stock Exchange NYSE advanced decline that took place last week. So we can see that the red line shows that there were more declines than advances. So that shows the breadth for the market, that the price action is really in certain kind of stocks which are making year-on-year highs. But that kind of divergence can go on between the advanced decline line and the market for quite a while. It's something to pay attention to and keep at the back of our mind, but we really have to go with the levels that we have been watching. The long time subscribers will know these levels we have put out there months in advance. So, and it's interesting to see. It's gratifying in some sense that the market is actually approaching those levels, and these are targets, and these could also, once the market has reached those targets, two things will happen. Either the market is strong enough, it just blasts through, and we'll have to come up with the new evaluation with the newer targets, or those might actually also begin to be sort of a turning point. We begin to see pullbacks happen in the market. Now we'll take a look at the NASDAQ, because the NASDAQ is the futures. It was really strong. Just look at this bar, how strong that bar is. I believe we saw this kind of performance of a bar of this length back here in October of 2023. So the market seems to be moving into this target of 20,750. Long-time subscribers will know that we have had this target for months. This is where we also complete this big ABCD in green. I have not labeled it as ABCD. We also have the expansion of 1.618 come in for the entire 2022 bear market. So in my opinion, that's going to be a really interesting level to watch. And the way the NASDAQ moves, we could be there pretty soon. When we were coming up with these kind of targets, the market was way lower, and it seemed maybe we might not even see these in 2024, let alone, but we are really close to these levels with less than 1,000 points to go in NASDAQ in the second half, the start of the second half of the year. So it's just really incredible to watch these and how these patterns unfold. Long-time subscribers who have been with us watching the channel videos for quite a while, they will know that when we came up with these projections, and now we are getting so close to these. So it's really interesting times. Now, If we move to the Dow Jones Industrial, this is really interesting, where this market is, bifurcated. It is different indices are doing something a little bit different here, and what we can see here is basically the Dow Jones is just in a trading range. Just put in a top, a high, and then this has been a lower high, but then this is a low and a higher low. So it's just a how do you call it, a wedge kind of pattern formation here. The most important thing is that I think if we hold this 78.6% retracement on 38,000 and these lows of 37,500 roughly, the market might actually still keep on dragging higher. We do have some higher targets for this, but you can see what the S&P 500 is doing, especially what the NASDAQ is doing. It just kind of also shows you the kind of stocks which are actually leading us. It's really a lot of hype coming from artificial intelligence, so those kind of stocks seem to be doing pretty good. And Dow Jones is also a price weighted index, so it's not a market cap weighted index. So certain stocks which are higher priced, if they're impacted, they'll just be reflected in the stock index itself. And then if we take a look at the Russell 2000, here we go. You can see Russell 2000 stuck in a trading range. It likes to be in trading ranges a lot. Maybe it just comes down and tests the bottom of this range again. So as long as this is held like 1920, there's possibility of ABCD higher, but it could take a long time to resolve. And if it breaks this low, then we could have a bigger ABCD moving it lower. But the chances are we are in this kind of a trading range for quite some time, and we can actually, I think, also see this same kind of pattern in its cash, which is the Russell 2000 ETF market. Last but not the least, let's take a look at New York Stock Exchange Composite Index. This is the weekly chart, quite similar to Dow Jones, but it did make a new high around here. So that's interesting to note. Yeah, there's a chance maybe it reaches to the 18,590, 506, 18,600 level if we have ABCDs and 1.272 expansion. So yeah, it's really interesting to watch these markets, different markets doing different things. I believe they are behaving or reacting to the economic data coming out in different ways, with respect to the interest rates, with respect to other macroeconomic data, jobs, for example, inflation numbers, for example. But ultimately, it's the interest rates which impact the valuations a lot. So interesting times to watch these markets. Thank you very much for watching the video, and if you found this video of educational value, then give it a thumbs up. And if you like our technical analysis, how we look at the markets using pattern recognition, Fibonacci ratios, expansions, extensions, projections, retracements, then please do subscribe to the channel. Good luck and good trading, and speak to you guys soon.